shareholder activism across corporate America, and certainly that's entered the REIT sector. And I think some people may even say we're in a bubble with respect to activism, given some of the things that are taking place. Let me ask you, is activism a discussion that you're having at the board level, and what's your reaction to it? Maybe Danny, I'll start with you.
Well, let me sort of take a different approach to that one, Tom, and I think Scott alluded to this, is one of the joys that we have up here as being public company CEOs is 5 or 6 times a year we get to meet for a couple days with investors and analysts and have them all tell us exactly what we should be doing, what we're doing wrong, and they never hesitate to do that, and how we really should be running our company. No offense, Michael. So the bottom line is I think you've got to listen to your shareholders. When I look at our company, we've been public for 22 years now, and we were really relatively small Midwest industrial and suburban office company when we went public, and that was very well accepted back then. We grew over the years, expanded geographically, really stayed in the two product types of primarily suburban office and industrial for many years, and again, that was well accepted. But over the last 5 to 10 years, investors have really changed their view of what they want in a public company. They like, I would say, more pure play than they used to. They like to be able to move between sectors when they want to, rather than look at a company that's in multiple sectors. So for us, when we made that strategic decision 5 years ago, it was for a couple of reasons. It was one, we were hearing a lot of feedback from our investors that they would like that, and two, there were some issues with the suburban office business back then, and we believe that there's going to be issues with the suburban office business during the next down cycle. It always comes back, but it never holds up well during the down cycle. And we believe that both the industrial and the medical office, which is really now over 90% of our business, are going to do fine through all cycles. So again, I think the bottom line is you do have to listen to your shareholders. They can't run your business, but you have to understand what they want to invest in. And Todd, really, we don't have active discussions about activism at our board meetings, but we do have discussions about trends in the industry.
So I'd just like to say, having gone public, that my life is so much more simple today than it was when I was private. So I may have a slightly warped view compared to other folks up here. I love our board, and I love our investors. It's really very simple. Without the board and its advice, I would be a lot less informed than I am today, and without our investors, I would not have gone public. So I also have a very strong ownership position in the company myself. And I firmly believe, and I said this during our IPO roadshow, and I hold my guys to it today, I'm not doing this as a hobby. I'm not doing this for ego. I'm doing this because I think that we should be able to add value. If we cannot add value in the form of stock price and returns over time, there's no reason for us to be an independent public company. It's really very simple. So when I look at this, I remain very focused on a daily basis of, are we doing what we are doing to add value? Are we doing what we are doing to add value uniquely versus the market in general? And it's a wonderful hold your feet to the fire approach. Whatever happens for our investors happens for me to a larger extent than for any of our investors. With that in mind, I do think that one needs to take a position, one needs to have a view, and we're relatively new at this game. I'm still at the point where a lot of our investors are trying to figure out what we're doing and what the returns will be, as opposed to telling us that we're doing it wrong. And we have the good fortune of doing something rather unique. Over time, it will depend on our results as to how happy they are, I suppose. We've already had investors sell out of positions that they had when we went public, and I was thrilled to do that, not only because we made them a lot of money, but because there are other people who wanted to take their places. Going forward, when we look at M&A in general, I hear what Scott said, and I understand it. At the same time, I came from a very complex and complicated background, and I do believe that there is value that can be created out of understanding and executing on complexity. It's just hard to find in today's world, and I think there's a time for it. It just doesn't happen to be right now.
Scott, your perspective? I mean, Carl Icahn was around in 2007?
Right.
What's your perspective?
So the illusion of Carl Icahn is after Sabrina agreed to buy our company, I woke up one morning, opened the Wall Street Journal, and saw that Carl Icahn was making a hostile bid to top their bid on Rechler, our company. And you know, what I would say is, there's, I think like everything in the world, there's no clear answer. I think certain people are well-intended and are thoughtful, and shareholder activism is seeking to cause appropriate change to maybe managers that are disaligned or not listening, and so, you know, poor governance. And I think in that case there's a positive element to it. I think there's another form of the activism which has been more driven by just trying to raise money, you know, force an issue which may be inconsistent with creating that long-term value along the way. I mean, as it turned out, for example, with Icahn on the proposal, the topping bid that he had with us, he did no due diligence. And so effectively we had to wait 60 days to push him through a process where he then disappeared. And that's how Green went through the deal anyway, but it was disrupted. And so I think, you know, and we heard this a little bit, and Mark, you laid it out well too, is that there was an article, this recent essay by Larry Fink about shortism, I think he called it, short thinking and investing, right? And I think that is a risk that we have in business, in the public markets, in politics today, is that long-term decisions aren't appreciated by people that want to get quick feedback, right? Quick returns, quick feedback, quick reactions. And the activists out there are generally looking for quick reactions. And so I caution companies to just react to them and be more thoughtful about what do we want to do, communicate with your investors what the real rationale is, but don't just necessarily bend because someone's making some noise around there.
But I guess it's just to